Finance Minister Pravin Gordhan met with rating agencies at the weekend. The Finance Minister says investors are satisfied with the country's ability to repay its debts. He says the focus now will be on growth. Gordhan is in Washington for the spring gathering of the International Monetary Fund, that's the IMF, the World Bank and G20. Well, to look at this visit and its implications for us, we joined in the studio by the Chief Economist at Investment Solutions, Lisiba Mutata. Lisiba, good morning and thank you very much for your time.
Good morning.
We know that the downgrading thing is waiting in the wings. We'll find out sometime in June what's going to be happening. But these kind of overtures, I call them that, where the minister is going and engaging with the IMF and the World Bank. Fortunately, he's not looking for money from the IMF and the World Bank. He's looking for policy advice and how to handle it. Yeah. But the credit ratings are waiting for action. Do you think they're being convinced more and more that, this man is genuine about making sure that the country goes forward and they should not downgrade us?
Yeah, so from the reports that I read from this weekend, there seems to be an urgency in his tone. He talks about we have a few weeks to make it count. If you look back to when they came back from a roadshow, they talked about in May they'll put out together a plan in terms of what needs to happen in terms of just lifting growth, even if it's more than 1%, which is not what we desire. That could be quite admirable. So I do think that maybe they'll put it down. There's a lot to be done. The economic deterioration is actually quite fast. I was looking at per capita GDP growth for South Africa. That's declining. In fact, its growth rate in 2016 is going to be 0. Normally we talk about headline GDP, which is now talked about 0.6%. I'm just referring to the GDP per head, GDP per population of South Africa. That has been declining, which means that the conditions are worse than they have been a few years ago.
Now, Gordhan saying, as we in our intro, that the focus is now on growth. Where can it come from?
There's a 9-point plan that has been put out for many years now. It was reiterated in the State of the Nation's address, looking at the ocean's economy, trying to make sure that SMMEs are supported, also looking at agriculture. All those were great points to put out. But we just need detail of how it's going to be implemented. Which locale is it going to be? What policy will come in place? I actually do think that fiscal policy can do a lot more in this, including tax policy. We seemingly have resigned ourselves to higher taxes in our country, which I think it's not quite the right way to go about if you want to lift potential GDP growth. Taxes eat up the potential to increase GDP, and I'm afraid we're not at that level yet.
Okay, talking about a 9-point plan, but from a credit ratings agency, you want to see action. You want to see implementation.
Indeed, that's what we want. So this dichotomy between what needs to happen from the fiscal policy, from the authorities, and what the markets price in is very glaring at the moment. Financial markets have priced South Africa to be non-investment grade. In fact, to be moving 2 notches down in terms of foreign denominated debt. So the way bonds are trading, the way equity markets are trading, the way the currency is trading has already factored in a decision. By June, where Standard & Poor's pushes us into non-investment grade or junk. So with that dichotomy, it just shows that the authorities need to catch up to make sure that the downgrade or the decline does not spiral to a point where it gets out of control and you increasingly become like a Russia or potentially like a Brazil.
And what does that mean? I mean, people keep on talking about this non-investment grade, this junk status. Just remind again our viewers, if a country, its sovereign debt its sovereign credit rating is negative or it's sub investment.
What does it mean? So it really just means that the price that investors pay, right, to hold equities, to hold bonds, to hold South African assets is required to be higher because there's much more risk inherent in that particular country. So we summarize that normally in terms of yields. you'll find that bond yields will go up because they are factoring in a requirement, a compensation for the risk that one is taking, given that there's less economic growth, there are no structural reform, inflation seemingly is eroding any gains that have been made, whether on income, whether on real returns in terms of equity markets. All that has been negatively impacted. So it just means that the risk towards that economy are higher.
Does it also become more expensive for South Africa to raise capital?
Most definitely. So when you go overseas, we just recently issued a Eurobond, which means it's the dollar-denominated bond in financial markets. Instead of paying 2.5%, you pay 4%, for example. So the interest that you pay when you borrow is higher. Also, because domestically, what normally happens with the central bank, it responds with higher interest rates. That which you pay on existing debt also go up. For South Africa at the moment, for any R1 earned by the National Treasury, 12 cents is being paid on interest and counting. Because if interest rates go up, it could now be 13 cents on the rand or even 14 cents on the rand.
Okay, finally, before I let you go, Lisiba, how much of a factor is political stability or political certainty in terms of the risk that you are speaking about, that they look at the risk involved in a country's markets and the finances and the economy? The politics of it, I'm just asking this because currently we have this big issue in South Africa following the Constitutional Court ruling on the Nkandla matter that President Zuma and Parliament violated the Constitution. And there's calls more and more from within the ANC and from outside the ANC for the President to step aside. And we've got local elections coming up in August. So how much of a factor do the ratings agencies take in terms of politics?
They very much look at it. It's one of the pillars that they look at in terms of assessing a country, including current account deficits, including all these financial things that we're talking about. But on the politics, if you were to look at what is happening in terms of other emerging market countries, South Africa, that which is happening at the moment, is not out of kilter to what is happening in Brazil or even Hungary or even earlier times in Colombia, in South Korea in the early 90s. All these discussions, so they are inherent in an emerging market country. The only problem now is that rating agencies then group South Africa along with those emerging market countries. In fact, Standard & Poor's last week, when they were in the country, chatting to many different stakeholders, they would pair us with Turkey and Brazil, which was very ominous because it suggests that they think that we're increasingly looking like them, which means we will potentially we are not investment grade anymore on that foreign denominated currency.
Thank you very much. That's Chief Economist at Investment Solutions, Lisiba Mutata.